Alright everyone, here we are with another video with Invest for Tomorrow, and to all the first time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. We're going to jump straight into this because I want to talk about what I'm seeing and what is the way I'm going to handle what I'm seeing. So there's a few ways to handle this, but opportunities will continue to persist and exist, right? Throughout the whole entire volatility of the market, whether it's going up or it's going down. We look for daily opportunities over at the Discord, and if that's something that interests you and you want to know what stocks I watch daily, you're more than welcome to join us. The link is down below in the description to the Discord. So the S&P 500 index, all it's done is rise, and it's had small corrections, right? And we've talked about them here on the channel, and the most recent correction we had was from mid-February to the beginning of March, and then as the S&P continued to go higher, I talked about the detachment of how things have changed. Certainly from last year to this year, growth stocks were falling because 10-year treasuries were spiking, as well as the fact that the cyclical and value stocks and recovery stocks of the reopening were the ones running and growth was taking a hit, and that's where opportunities were forming, guys. These pullbacks or corrections, and even when the S&P continues going up and the other sectors are hurting, that seems to be the best opportunity to go ahead and maximize profits and minimize losses. I've learned that in the 7 years that I've been watching the stock market, investing in the stock market, and when you really zoom out, every single correction before in the past, even way back here in 2015 and even the one back here in 11, all that stuff, I've been watching these charts and looking at how certain stocks behave during those times. That's where the biggest opportunities happen. Now, this was one of the most uncertain crashes. That was not a correction, that was a lot bigger. But right now, what investors and experts are anticipating is a crash. Now, in my personal opinion, I think that there's going to be more of a likelihood of a correction than a crash, but there's a lot of things adding up right now to why this is possible. So we're going to talk about that in just a moment, but I want to share with you guys why it's so important to be aware of what stocks to look at and prepare for to maximize profits and minimize losses when these corrections happen. Opportunities are forming when there's pullbacks, okay? I've always said it. Everybody looks at this as a setback. If not, this is a setup for the next bull run. And even right here, this looked like a setback, and that was a setup for the next bull run. Setup for the next bull run. And we just continue to hit newer highs. Now, will we continue to hit newer highs for the coming months and weeks? Possibly not. There's a likelihood that things may slow down, either consolidate or pull back. But let me show you guys what are the things everyone's worrying about. But before we jump into that, I want to share with you guys what we prepared for over at the Patreon and Discord during this correction time from February all the way to May, and what happened in the last several months and weeks. So let's look at it. So one of the first ones here was May 4th. I mean, I've been sending out stocks I'm watching in March, April, buying the dips, but May 4th, we caught AMD, okay? It was sitting at $78. I saw room for this to pull back a little bit more. And let's go ahead and look at the chart, how it reacted. And it certainly did pull back a little bit, but where is it at now? And this is what it all comes down to, right? Like catching the opportunity of quote unquote the dip, right? And we talked about it way back here, May 4th. Started to jump up a little bit, pulled back down, and it hit lows of about $72, okay? It hit it 3 times. It almost seemed to have formed a bottom there, and it took off from there, reaching all the way to 82, 85, and then $95 at the highest peak. It's had a big drop recently, and it's running again. Now, the higher this goes, right, the riskier it gets. It's all about trying to catch that bottom, right? And that's what we did over at the Patreon. But I'm not saying there's no more room to the upside. It just gets riskier, and there's how much more is the question, right? How much more is there to the upside? And that's what you need to do more research on what analysis ratings are saying and what the chart is showing. Now, the other stocks that we talked about was PLTR, we talked about Peloton, and even DKNG. So DKNG, we talked about it at $48. It pulled back a little bit. I was looking for it to reach 44. We're going to look at that in just a moment. Then we have PLTR. We talked about it below $20. It actually broke through that support we were watching for. And I had stated, which we're going to look at in just a moment. And here is Peloton, right? Peloton. Caught this one as it was going lower. in the $83 mark. So we're going to look at this together here. So PLTR, as it broke through $20, I stated that this is something to watch between $15 to $20. Well, what happened later on that week? It reached about $17, guys. $17. That turned out to be one of the best dips that PLTR has had in a while. And there it goes. It started to fall, hit $16 actually, and it took off to $27, nearly doubling. Okay, it almost gave about 70 to 80% plus on that jump. Now DKNG, we talked about it at $48, and this stock actually pulled back right in that same week, and it hit lows here of $39, and that's what we were looking for. We started watching this early, preparing ourselves, and it took off to $55. This was phenomenal. Okay, and that big jump there, it gave nearly a 50% plus opportunity. And then we have Peloton, which Peloton, I mean, there was no better time than to be watching this in the 80s, because you're going to look at this chart. The lowest point that it reached was 82. Okay, and we talked about it way back on May 8th. Look at this. We caught that at its best dip. It literally ran up, pulled back down, and then it literally started off the week on 82, and then boom, 86, 85, 89, and it's just been taking off since. And this has hit a high so far of 129. This is right there showing an opportunity of 50% plus since we talked about it, and where it sits right now, it's between 30 to 40% plus. So this is where I want to encourage you guys to be aware that opportunities are formed now. And this is the best time to start looking, and that's what I'm going to be doing. I'm going to be preparing for the opportunities that are about to come, so that in a few months from now, what I talked about in May, what I talked about at the beginning of May, and towards the end of May, in the middle of May, and March and April, it starts to reflect in the chart now. That's what investing is, guys. I do want you to be aware of that. It takes time, but it's all about preparing, being aware, and actually staying focused. Don't let the red, the green confuse you. I talk about all that as well in the stock market and emotional intelligence series. Now, this was one of our hugest home runs, guys, right here. And that is Clove, guys. Clove, we caught this one as it was going downwards, caught it at the 7s, talked about it way back here in May 16th. I even talked about it as it was dipping, but May 16th was one of the last times I talked about it. I mean, when you look at this chart, it literally was impeccable, the timing. I mean, that right there, you know, who would have known it was going to happen like that fast? But it was something I was preparing for. So May 16th was way back here, hit lows of 655. We caught it a little early based off of what happened, right? 747 is when we talked about it. But it was all about, at that point, preparing, right? And catching the dip if I need to. And every single stock I buy and I'm watching, I'm willing to buy the dips. And in just 2 weeks, 3 weeks, it jumped up to 10. It gave a nice 30% plus opportunity. And it went ahead, sat sideways, and it took off to $28, guys. 4x. That was impeccable, the timing. We talked about it way back here in the 6 and 7s as well. But who would have known it would go that high? You know, I was looking for a 30, maybe a 50% plus jump. And I mean, this just went beyond expectations, guys. So if you guys want to know what stocks I'm watching now, if we do go into correction mode, or even while we're not in correction mode, that I'm always preparing for and starting to watch and buy, even worthy of dips, you're more than welcome to join us. The link is down below to the Discord and Patreon over at the Discord link down below. So what are we watching for as this correction, right, is happening, right? Like this whole entire speculation, because right now I don't see the S&P 500 showing any signs of a correction, and even the VIX, right? The VIX is just down. Now, could it start this week? Possibly, with all the FUD being thrown around. I mean, maybe. And then there's just a lot of other variables, right? The upcoming Fed meeting, and if they start talking about tapering. I mean, that's one of the biggest things that is probably right now affecting the whole entire FUD situation. So first thing I noticed is 10-year treasury is going lower, right, in the last several days, and all of a sudden it's spiking up. So if this spike up continues, growth might get hurt again. Okay, that is something to be aware of. And if this is temporary, growth is probably going to start looking like a discount. Then we got Wells Fargo closing all personal lines of credit, and it may affect customer credit scores. So this is something that is more focused on the credit scores, but this is something that the whole entire media and everyone in the markets is looking at as a huge situation, because that means less spending, less consumer spending, slow of growth. Slow of growth can hurt the economy. Economy reflects in the stock market, right? So that is something to be aware of. And not only that, we're going to go into slow growth regardless in the S&P 500 and stock market, because earnings are going to be really tough to beat going into third quarter, fourth quarter, and stuff like that, until things kind of realign and readjust, because there's a lot of beatings that happen in Q1, Q2, but for Q3, Q4, a lot of investors are saying there might be a slowdown unless it picks up and things just keep on going. We'll see what happens. Now, we also have something else striking headlines, and that's the Delta COVID variant, okay? And those worries are outweighing the Fed tapering concerns. So one of the biggest concerns was the Fed tapering concerns, and this was stated by Charles Schwab. You can look this up. It's a short video by CNBC, an interview over on YouTube. And in this whole entire explanation, they're talking about how there's a rotation happening again into defensive stocks, and the Delta COVID variant is now the biggest concern. It was the Fed tapering before, now it's the Delta COVID variant. And then on top of that, we have 10-year treasury spiking up, and then we have this FUD with Wells Fargo being created because of these headlines. So there's a lot of variables all together going on right now. But what I want to go ahead and tell you guys is a winner was once a loser, okay? That's one of the biggest things you want to be aware of. So to be a winner, you have to know how to lose or have experience losing, okay? And how do you learn and gain experience to become a winner? By losing. And how do you become a winner? Through experience. And the only way to obtain that experience is to have lost to then win, okay? I know I said a lot right there at once, but if you got to replay it, replay it. But one of the biggest things I learned is it's okay to lose as long as you have a plan and a strategy. And this is where it comes into portfolios and stuff like that. If you have long-term plays, they're going to look like losers right now, but that does not mean they're going to stay there. They're going to be your winners if you've done your due diligence and research. That's how I feel about the stocks in my portfolio, right? But in this whole entire volatility, there's always opportunities, and new opportunities are forming. That's how we caught, AMD at $78. That's how we caught, DKNG as it fell to 42, jumped up to 53. PLTR at $16, $17, jumped up to 27. That's how we caught Clove at $7. That's how we caught Affirm, in the low 40s, and then it jumped up to the 50s. And then that's how we caught Airbnb, right? In the low 120s, 130, jumped up to the 150s. That's how we've caught all these stocks. And not only these in May, we've caught them in April, we've caught them in March, and a lot of them have gone up 20-30% plus. And that's what I'm preparing for now, okay? That is what I'm going to be preparing for if there's a correction. And if there isn't one and things continue to move smoothly as they have been, through the volatility to the upside, just continuing going higher, I'm going to continue to look for daily opportunities like the ones popping up here on the screen. We've been doing this since I started the Discord back in March, and every single day I wake up and I look for new opportunities. So if you want to know what stocks I watch daily, you're more than welcome to join us. The link is down below in the description to the Discord. If you learned something new, don't forget to subscribe. Click on the bell so you don't miss a single video that I post. Share this with a friend so they can receive the insight as well. And as always, thank you guys so much for watching, and let's make some money.